But Jinesh Gopani joins in to help us understand what to do in this current market scenario. Jinesh, hi, morning. We're calling it a confidence crisis in the market, considering the mood is so sour. Would you say that this is the kind of skepticism in the market, the negativity which should be deployed and made use of by long-term investors? Is this the time really to hunt and look out for bargain opportunities in the market? Or would you say wait it out because you don't know the depth of this crisis which is currently playing out in the market?
See, I think fundamental economy is still slow. So to that extent, doing bargain hunting always calls for patience. And if you are a long-term investor having a 3 to 5 year view, then obviously at some prices, some stocks will become attractive. But given the demand destruction which we have seen and the slowdown what we are seeing in the economy, I think we have to be slow and cautious rather than going all out.
Why do you think the bad will not get horrible or horrible will not become terrible? Every data point is pointing to a slowdown and a indication that more trouble is coming. I mean, we may laugh over it, but I mean, there's nothing which stops this market from going down 10-15% more. I mean, in my wildest dream, I never thought that Yes Bank will go to 100 rupees or Diwan Housing will collapse by 95%. I mean, things happen.
Yeah. See, individual stock-wise, depending on what's happening in a particular stock for various reasons, we are already seeing mid-cap, small-cap, and some of the poor governed company are already down, and maybe to a point of why it cannot get worse, it is already worse. But if you see the broader market, the good quality companies, good governed companies are holding on to the horses. So I think it is total, I would say, diverse views which are there. That the tier 1 companies, good government companies will continue to do well and are holding on, money is flowing there. But there are sharp corrections which we are witnessing wherever there is an inch of distrust or trust deficit which is coming into play. So I think markets are very, very difficult at this point, very volatile. And one has to be very, very careful given the cleaning up of the system which is happening.
So are you saying that for next couple of days and weeks and maybe perhaps till end of the year, it will be like a one-trick pony, Bajaj Finance, 2-3 private banks, maybe 1 or 2 IT companies? I mean, do you think the market will only be limited to maximum, not even 50, but 40 companies? Because that's what everybody is doing.
See, Nikunj, the problem is really in a sector you are not having 10 companies, 15 companies or 20 companies thriving, growing and giving you those growth opportunities. When macro is slow, it impacts the sector, and if you are not a leader in that sector or if you are not able to navigate those sector dynamics well, then there is a problem. So at this juncture, the problem is we have very few companies who are delivering on growth, who are able to navigate the difficult phases of the sector, and hence it's a very filtered market, and hence I said that it is a difficult period. We have to be cautious. We have to ensure the stocks which we are buying, at least in our portfolio, are relatively good enough to weather this kind of an storm.
Fair point. Where within consumption are you hunting, Jinesh, or is the strategy to move out completely and look for better opportunities elsewhere?
No, see, from a portfolio perspective, we still are bullish on private banks, select NBFCs, consumption play. At least there is growth, there is opportunity to scale. We will see in next 2 quarters how the numbers pan out. Even we feel doing our channel checks, June quarter should also be not that great, given April, May you had an election season and obviously things were slow. Demand is just picking up, but not to the extent what you want. So maybe only after monsoon is also delayed. So all factors are not pointing out to a great start of the momentum. We'll have to see how the budget goes, and if budget is more progressive budget, we will definitely get animal spirits going, maybe not now, maybe 6 months, 8 months down the line, and that is where the momentum should come back. So at this juncture, we are holding on to the portfolio companies and the sectors where we are comfortable in terms of growth and the governance. We will pick and choose as and when the opportunity comes on the stocks which we have in our universe but not in our portfolios.
What about the infrastructure engineering space? That's one pocket that you're finding attractive. Talk to us about the rationale there. Is it purely on the back of the reform push? Are there any specific factors that you're looking at with respect to certain companies? What's driving the optimism there?
So I think government has been spending for last 3 years, and that benefit is coming to some of the companies. But as I would have said in earlier also in your channel, that the sector itself has a very low entry barriers. So you are not finding many companies, at least in the infra space, where you want to play for a longer term period with a 3 to 5 year view. Trades are okay, but it's not a classic sector where you want to put your money with a 3 to 5 year view, because it's a very low entry barrier sector. On the capital goods side, obviously we have some names in our portfolio. We are waiting unless and until private capex kicks in a big way. We don't see a big cycle coming back. So as I said, we'll have to wait for budget, how progressive is the budget, and how private corporates take it over next 6 to 12 months.
So Jinesh, I'm going to ask you a very frank question. We at least don't have a clear answer. When I say we as a media house, we don't have a clear answer that when will the slowdown get arrested. Some are saying October, some are saying December, some are saying next year, because the base effect will kick in. If the consumption engine, which in a sense was the only engine which was driving the economy, if that engine slows down, what will happen to earnings? Because capex has not recovered, and it will not recover in a hurry. Let's be very clear about it. If consumption slows down, then we are looking at a double compression. How does one invest in this kind of a scenario? Because when everything is getting compressed, earnings will not recover.
Yeah, so see, we have to be on guard. We have to keep on doing our channel checks. We have to keep meeting the managements. We have to keep meeting the industry experts, and just ensure that things are not collapsing from here. So as of now, what I can say frankly, the thought is there was a demand destruction during the festival season. Oil prices were high at that point of time, which led to further demand destruction. And obviously the things around IL&FS, the things around job growth scenario not being good, urban slowing down, rural also slowing down, all has come at one go, along with the big election which would have also created some kind of a wait and watch for the consumption to kick in. So frankly speaking, what we are witnessing is that consumption is still slow. It has not picked up to the extent what we want, but things are looking slightly more positive, let's say in June as compared to April and May. So it's an every month, every day research we need to do, and just ensure that we are not falling off the cliff. It doesn't look like that way that we will be fall off the cliff, but you have to keep doing your work and ensure that things are better than getting worse.
But on a tactical basis, for the next 2 to 3 years, do you increase your allocation to mid and small cap schemes within mutual funds, or do you stick by with the balanced category?
See, I think given the current scenario and see, everything is on hope that things will rebound. But as I said, global markets are also weak, global economy is also weak, which is not helping India at all. Though we are not directly impacted or benefiting, but generally it has a sentiment impact. So to that extent, I think we have to be cautious, we have to be balanced, we have to be taking a balanced approach. Also, what we are seeing is that after GST and demonetization, the impact which has come to the mid and the small companies is much larger, whereas the bigger companies are able to navigate those phases well and are getting bigger and bigger day by day. So there is also a case which is in point that larger companies might become bigger and larger further, whereas the mid or small companies might find it difficult, depending on the sectors, might find it difficult to grow at an exponential pace what they used to earlier. So I think we have to be balanced rather than going all out either side.
So, Jignesh, if Nifty has given a double-digit return, almost double-digit return in this year, looking at where trade war is headed, where local slowdown is headed, there is no large excitement amongst mid-cap players. Flows at max, you would say they could remain stable. That's where even I don't think flows will be that great what we've been in the first half. Are we in for a flat second half, or are we in for a, almost like a no-return scenario for next 12 months? I mean, is that something possible?
See, again, that depends, frankly, how the budget goes, what is the thought of the government, how progressive they want to be, how they want to bring back growth in the economy. So there are many things which lies around budget. I am not saying it's a big event or something like that, but I think you will get a direction where they are heading, and if things are better, sentiment improves. See, one thing we have to keep in mind, the two big factors which are in our favor is oil prices are down, currency is stable, and also the 10-year yields are coming down, not only globally, also in India. So to that extent, there is a breather to the corporates in terms of pressures what they are facing on the interest cost side or on the margin side because of the oil prices. So I think if it is all about demand. If demand comes back, frankly I don't know when it will come back. That is where the sentiment will definitely play a very vital role. If people are happy, people are getting jobs, then I think obviously the sentiment will be very, very positive. But it might take 6 months, it might take 12 months, depending on how government is able to arrest the decline in GDP, declining growth of GDP, and bring back animal spirits.
Thank you for joining us this morning, Jinesh, and talking us through how you're perceiving where we stand currently in the markets.